So welcome everybody again. This, as Greg said, is the fourth in our sessions, webinars around the idea of becoming lender ready. And the idea behind this is that we will actually provide the opportunity today for a Q&A process, question and answer, based on the information that's come in from the previous three webinars. So we're going to be very cryptic today for a couple of reasons, one of which is we want to get to your questions. And one of the co-presenters I'll introduce in a moment does have to leave in roughly half an hour or a bit less. So I want to get onto the questions fairly quickly. So we do have a three-panel group here. So you've already met Vern Ezzy. Vern is representing Qrider in Queensland, which is a government lending agency. It's not quite that simple, but that's enough. And I guess the interesting thing about Vern is he's both a Qrider representative, has had commercial banking experience and considerable corporate sector experience. Welcome, Vern, and maybe one point to add, if that, or have we got you covered?
No, pretty well got me covered, Gordon. Thank you. Welcome, and good to be here. Thanks,
Vern. Our second presenter, who was a co-presenter with me in webinar 3, is Kym Thomas, CEO of Qrider Pastoral Company, based in both Cunnamulla and Inverell. We've been working, ABDI has been working with Kym and family for some years, and the most recent foray has been into acquiring a significant amount of funding to support the business growth plans of Qrider. Kym, welcome. Anything that you need to add so we know who you are?
No, I think, Gordon, it's just, yeah, it's been part of your setup and expanding our Australian meat, sheep and stud operation that led to what we're doing today. Yeah.
Thanks, Kym. I'll spend a couple of minutes longer introducing Damian Street to you all. So this is Damian's first foray into our webinar program here, though anyone who's been involved in our programs previously will have most likely met Damian. He has a commercial corporate background, particularly focusing on business restructures. So how do we reorganise a business to, generally speaking, to grow? That means he's also got some experience in working with investors at a range of different levels, most certainly with banks. His experience mostly is in the mainstream business arena as well as the agri sector. And as I said, is a business advisor with our company and has been involved in a range of programs and business activities, including working with Kym. So Damian, I'll give you a couple of minutes to add to the introduction I've given to you. So just so people have a bit of an idea of who you are and where you fit.
Yeah, thanks, Gordon. So one of the big parts of my life is trying to help companies make sure that growth doesn't outrun cash flow. That seems to be a perennial problem amongst many businesses, whether on the land or in mainstream business. So the ways and means of doing that have brought me into extensive involvement with conventional lenders and also investors, as Gordon says. So I'm looking forward to any questions anyone might like to ask. I hope I'll be able to help you. And that's probably about it, Gordon, for the moment.
Thanks, Damian. Okay, well, we'll continue on. For those people who've listened to some of our previous webinars, there'll be a little bit of recapping here. But at the same time, I always like to, I guess, set the scene more efficiently for new starters who might not have emerged until today. So since 2015, ABDI has been working with MLA's donor company, AgForce and DAF in Queensland to run some business management programs to support professional development of business owners in the meat and livestock sector and the broadacre sector in particular. We've actually run this series of webinars simply because we've established in the last 12 months a new program to meet what we understand to be a very compelling need out there amongst small to medium enterprise business owners, which is to become lender ready. And in our previous webinars, we've talked about the changing lending landscape. In fact, that it's really quite important for people to understand that no longer is it a hit and miss affair. One has to be very organised and structured in getting money from lenders, no matter who they are, and that's the idea behind this program. Our agenda today is really covering three areas. Firstly, we've established a number of key principles of becoming lender ready in our earlier webinars. We've had a conversation with Vern around some of the key points around what lenders look for, a conversation with Kym around business owner experiences, and today I wanted to recap on some of not only the key principles but some of the key questions that are often raised directly to lenders and also by business owners themselves, and then jump to our panel session. As Greg said, and I want to reinforce this, we will rattle through the next bit, and I do actually have some core questions that have been I guess, articulated so far. I wanted to address those key questions first with the panel, and then after that, if there's any other questions that emerge, we'll move to that potentially after Damian leaves. So the points that I just brought up on the screen there are, we'll deal with your questions. So if you want clarification, please put something in the chat box or the question box. If you've got something that comes to mind that we've not dealt with before or that's a burning issue on your mind, also put that in the chat box and we'll just see how our time goes. If we run out of time, we'll answer your questions afterwards. So I'm now going to recap on some of our key concepts that have been developed already in this webinar series to date. If you look on the right-hand side, you'll actually see a growth cycle, which we use in our work with clients and in our professional development programs. Fundamentally, it's determining level of profitability of business operations, thinking about what the end game is of that business, how they're going to make a profit, and then this cycle of understanding business best practice, creating a blueprint, implementing the plan, refining performance, and continuing to develop the business. So the importance of this is that it's a strategic decision to be made when and how a business is to be grown. Broadly speaking, extra money is required to deal with that lag period, or you may be able to get that from internal resources. If money is required from external resources, you'll need to think about why are we doing it, what needs to be done, how we're going to tackle this business growth plan, and have some thoughts around risk about what's worked, what hasn't worked. We've developed this program based around some of these key questions that have been posed to us over time, which is, it's a changing marketplace. If I don't know the answers to questions, what do I do? Because I don't want to feel like an idiot. Is there someone out there who can provide a checklist of what works to help it make it easier for me to work through a process? Particularly because point number 4, it takes time. And also point number 5, it can be very confronting. And so what we're seeking to do is to help you go down that track. The 6th point is, how do I know if I'm getting a good deal, and how do I work that out? So the fundamental behind all of this is there's a degree of complexity. Sometimes for people who are not used to doing this sort of thing, it can become very frustrating. That's the reason why we developed this industry program called the Leander Ready program. It's simply because these problems are, for business owners, it's one more thing to do. It's a complicated affair. How do I create a straight line, if I possibly can, to deal with all the paperwork to get things done? So this particular program is having someone to help you walk through a process that is proven to work. We always like the idea of a group process because it helps people bounce ideas off each other as well as us. We provide some templates to help you do what you need to do. Most importantly, we help you think through the questions that come to mind that you may never have thought about before. And that was, I guess, part of the conversation we had previously with Kym. The second point that we dealt with was the idea of an optimum result, because if you're going to acquire money from someone somewhere, the optimum result deals with a couple of things, which is sure interest rates, the financial side of things, but often the terms and conditions of a loan are something that you'll find acceptable or not acceptable, or you may not have even thought about. So it's important to deal with what we call quantitative and qualitative elements of the final result, the optimum result. We discussed 6 key principles. They were understanding the environment, becoming clear on developing your plan, having a commitment to seeing it through, understanding that in many respects the lender is in the box seat, but at the same time they want to do business with you. So how can we create the win-win for the lender and for you? How do we structure things so we engage with lenders in an organised manner? How do we consider these offers? Those are some of the key things. And that's the reason why we set these webinars up and this Leander Ready program. We talked, and Kym, I'm going to just get you to elaborate on these key points in a minute, and I'll summarise them, and then that will lead us into the questions which are coming shortly. So if I paraphrase some of the things that emerged from Kym's experience, I'm a business owner. I'm seeking money from a commercial lender. What I discovered is there's somewhat of a game that you need to understand the rules of. There's a way in which things are done. If you know how the rules are structured, you can work within that framework. If you don't quite understand it, you feel like you're somewhat at a disadvantage. And so the reason that we discussed this with Kym is because we were able to give her the support that we want to give you all in a Leander Ready program, to give her the confidence to do what needed to be done, to deal with some of the detail, which tends to trip us up, and to understand that you feel far more confident if you understand uncertain elements. So Kym, a couple of quick comments, if any, about those points before we move on to our questions.
I think you've covered it off, but just basically when you're going into it, you're not a player that's playing in the field all the time, and a lot of people in agriculture haven't got a university degree behind it in business, and so don't understand a lot of the structures. So you need something to be able to refer back to, someone to give you confidence in what you're saying, because yeah, it's monopoly. Sometimes you feel like it's a game of bluff, you know. How the clarity becomes a bit swayed, and you've also got to look after your family, your estate, and work out what, you know, it can be quite daunting unless you've got something that you sort of can refer back to. It yeah, it's not easy.
Okay, thanks, Kym. So that sets the framework for why we developed this Leander Ready program. So I'm now going to move on to our key questions, and I'll just show you all those questions before I develop them further with the panel. The first one is about negotiation. The second one is about information. The fourth one on the right-hand side is about information. The fifth one is stress testing things. And the third one is about government lenders. So I'm going to go back to the first one. Damian, I'm going to ask you a question about negotiating with banks and the idea of competition. What's your, and then Vern, I'll come to you, and then probably to Kym. What observation do you have about this idea of creating competition or going out to the market, Damian?
Well, it obviously depends on if the borrower, proposed borrower, is a, you know, is an existing client of the bank. They may have been with them for 20 years, 30 years, 5 years, whatever, or they may have never dealt with a particular bank, and the bank doesn't know them, and therefore has to, you know, engage far more in a far more rigorous process of investigation than they would otherwise do if they've been there for, you know, a long time. That just makes sense. Look, as a sort of general business proposition, useful working generalization, I do think that it's important to have what I call vanilla and chocolate options. And whilst that may be uncomfortable for some lenders, because you know, if they've been dealing with it for 15 years, there's a lot of goodwill that's built up, a lot of trust and so on, that they might, some lenders, not many that I've come across actually, you know, could get a little bit disturbed that you're kind of ditching them if you're looking for alternative options. But as a general business proposition, I think it's very important, not so much to create competition, but just to be sensible, and prudent about understanding what other options are in the marketplace. That's just a straight business proposition that I think is important. So you call it here creating competition. Well, I think it's creating, you know, giving yourself as a proposed borrower, you know, intelligent options that may not be with your bank or may not be with the one that you've just applied to. So yes, I think it's a good idea to have a comprehensive understanding of alternatives.
Thanks, Damian. Vern, I don't want to put you in a difficult position because you're now like a government lender. Do you have any comment about this idea of intelligent options, we'll call it, before I move on to Kym?
I think it's always good to have a comparison. You know, different institutions have changing guidelines, changing policies from time to time where their risk, you know, and that's probably driven by mainly from the commercial sector risk appetite. You know, not too long ago, the commercial sector had a quota on interest-only loans, where they could only draw a certain percentage of their loans interest-only down in any given month. So if someone was looking at the tail end of that period, looking for an interest-only loan, it may not have been able to be provided just simply because that institution's quota was full. So you get different changing goalposts like that. So yes, it's good to know what alternatives there are out in the market at any given time.
Thanks, Vern. Kym, you've been right in the middle of all of this. What's your view about intelligent options or comparisons?
Well, every bank's like every different insurance company. They all have a different set of parameters, I suppose, and what they're prepared to accept and not accept. There are different personalities in every relationship manager, and you've got to find the one that actually suits your personality. They need to know that they're confident in you from the other side of the coin. So you've got to work, got to understand what their shoes, and they've got to understand your shoes. And then so by having several options, you have a better idea what's out there and what's going to suit you, I suppose. So I always think it's a really good idea to get a few ideas. Yeah, go to a few. Yep.
Okay, thanks, Kym. And I'm running through this in a bit of a hurry because I want to give Damian the opportunity to have input to the second question and also the fourth question. So Damian, I'm going to ask you about point number 2, about what information should we be giving to banks, and in fact, question 4, which is what reported values of your expected income for forward projections should be considered. These were 2 questions rolled up into one in one of our webinars, and to me, it's about level of information. It's probably about level of borrowings. It's about risk. And it comes to the point in brackets about whether the value should be conservative or bullish. So I'll start with you, Damian, then go to Vern and maybe Kym's experience. So Damian?
Okay, so as far as information goes, clearly banks are interested in 4 broad areas. The first one is a comprehensive understanding of the assets and liabilities of the enterprise. In other words, balance sheet information. Secondly, they're interested in your income and expenditure, or profit and loss, both from a historical and a forecast standpoint. They're most interested, particularly after some horrific droughts in the last 3 or 4 years, comprehensive understanding of cash flows, cash inflows and outflows, as opposed to, there's usually can be a huge difference between what the profit and loss says and what the cash flow says. So they have a comprehensive interest in studying and understanding all aspects, not only of your historical cash flows, but also your forecast cash flows. The common jargon for those three items of information when it comes to forecasting, which is the fourth area, is what's called a three-way forecast. In other words, three-way forecast of assets and liabilities, income, expenditure, and free cash flow, or cash inflows and outflows. They are absolutely the key areas for the bank, because from that they will, they will, as there's a question coming about stress testing, they will examine the capacity of this business to repay the capital they're providing you, and so they're taking that risk. So they have to, go through comprehensive risk analysis themselves to gain their own confidence, not just yours, but theirs, that you can in fact meet all their terms and conditions. As far as providing, is it detrimental to give all of our expense details? Not at all. In fact, if you're talking about business expenses, 100%. If you're talking about school fees, well, that may be captured under your drawings or under your salary. But these days, particularly since the Royal Commission, there is, I had noticed a fairly sort of intensified examination of costs in far more detail than they did, I think, pre-Royal Commission. And some people may not think that's right, but that's just what I've noticed. So it's not detrimental at all. In fact, I think you should give all your expense details. It's going to come out one way or the other in either the cash flows or the P&L. So absolutely full and proper disclosure.
Okay, thanks, Damian. Damian, look, I'm watching the time. Would you like to comment on that final point about bank stress testing before we maybe let you go, and then I'll hand back over to Vern for his comment on those points?
Well, I think that stress testing means, okay, so the bank is going to be seeking, in most cases, security. It will have been given those documents I mentioned earlier about the balance sheet, the profit and loss, on the cash flow, and they'll do scenario analysis where they'll say, okay, if there's a good result, if there's a bad result, and they'll get hold of your documents and say, right, what happens if the valuation of the property drops 5%, 15%, 25%? What happens if the income drops, 5, 10, 15, 20%? Where are we placed as a bank? What is our risk assessment if this business does encounter stress? How far down can the income be, or the cash flow, or the valuation of assets, before we're going to have to possibly look at a write-off? So it's another word for it is scenario analysis, and it's the sort of thing that anyone, before they even get to the bank, should look at. If they're going to borrow X million dollars, what, given that the borrower is the one at risk, they should do their own stress testing before they even go to the bank, just to get a comprehensive commercial feeling for the risks they're taking. So essentially scenario analysis based on differing asset, liability, income, expenditure, and cash flow results.
Okay, thanks, Damian. Damian, do you need to disappear?
I do, Gordon, unfortunately. I do apologise.
No, that's fine. I mean, I realise you're in Sydney, not the Gold Coast, where you normally reside, and got meetings to go to. So, Damian, we'd like to just thank you. And for those people who roll up to the Leander Ready program, Damian will be my co-presenter along with others. And so you can find out more and hear more from him within that framework. So, okay. Damian, thanks very much for your time. We'll let you go.
Thank you. I apologise for having to go now.
All good. Thanks, Damian. Good. Cheers. So, Vern, I'll hand back question 2, question 3, and question 4, not numbered, of course, to you, just to get your take on using whatever perspectives are relevant to you right now.
Thanks, Gordon. The giving of information, it's absolutely necessary to give all the details. Particularly if you're starting with a new bank or new banker that you don't know, if information is omitted, the level of trust goes down. So you're trying to develop a rapport and trust, or maintain rapport and trust with your banker. And if there's a piece of the jigsaw puzzle is missing, that level of trust is going to reduce. And then the magnifying glass comes out a little more, and things are probably more robustly checked than what they may have been. So that's on the information, and your bankers will continue to request information until they're comfortable that they've found out all they need to know. Tipping to the third one, do government lenders direct to producers? QRIDI definitely does. They'll lend direct to its clients, who are predominantly primary producers. And we also do work with current lender. That could be a commercial lender. In some instances, recently we have 3 lenders involved with Qrider, the customer, the applicant's commercial lender, and the Regional Investment Corporation, who are administering a number of federal government loan programs for primary producers. So, of course, the more lenders you've got involved, the more complex things become, more information is required. The same or similar information, but you do, it is another party to negotiate with. So stress testing, typically pretty well agree with what Damian said there. We would look at base stress test. Yes, what if income reduces by 5, 10, 15%, and at the same time costs went up 5, 10, 15%? What is the industry risk? It's not that long ago where we saw a shutdown of the live export for beef cattle in the north, which put that industry and those industry players under significant stress, as well as banks. You've got those types of things to consider. So we'll pause there, and back to you, Gordon.
Yeah, thanks very much, Vern. Vern, before I hand over to Kym to give her, I guess, personal experience of how this has all played out, or comments or observations that others might benefit from, the point in question 4 there about conservative values, I've had some experience of talking to a bank who said, whatever you do, use conservative values. So if you think you're going to be selling livestock at $7 a head, don't inflate it to $9 a head. If anything, call it $7 a head, because that's your past experience. And if you want to do your stress testing and scenario analysis, maybe you'd like to call it $6.50 a head. Do you have a view on how lenders actually like to see those values of items described? And sorry, the other point that I was about to make too was, in the documents that we prepared, we actually described this sort of scenarios from $6.50 to $11 a head, so that the lender could actually see in a transparent way what we were talking about and why our projections were done a certain way. So over to you, Vern.
Yes, thanks, Gordon. Look, cash flow projections always a bone of contention between bankers and applicants. I guess the short-term use current values, probably that 6 to 18 months time frame. Obviously, the further you go out, the more conservative you want to be in your projections. and you're right, we need a description of how those dollar values were obtained, and that may be a combination of historical sales results that have been above market, justifying a forward projection that is considered above market. And anything you do, the recipient of the information just needs to understand how those numbers were obtained. For instance, we at Qrider do a forward projection, and currently on beef we're using a 10-year average. And the reason for that is that we've got significant increases in beef prices in recent times, and a 5-year average would skew the price a little too far, be a little too optimistic. So yes, the further out, the more conservative it should be. But no matter what basis you use, please explain how you sort of arrived at that, and if you are, particularly if you're at a market premium, how you're going to realise that premium over the current market.
Okay, thanks, Vern. Kym, have you got any comments on your experience with these matters around values, information, and so on?
Oh, I think my experiences have been probably covered fairly well about what you do and how you do it. Yeah, I always felt conservative was better than anything else. It saves you at the end of the day if you're more conservative than anything. But yeah, cash flows are hard to do. But other than that, yeah, that's about all I have to say. So
probably drawing on those 2 points then, when we talk about the discipline, focus, clarity, and so on putting this information together, what we've just been discussing for anyone listening is that's the reason we made that as one of our key principles. So, for example, it's defining what potential lenders, if we've got lending options out there in the marketplace, what they need and want, and trying to be as transparent as possible and as straight up and down as possible, so that nobody could, I guess, ask difficult questions about the assumptions we'd used. It was all transparent on the table in the documents. So, Greg, are you in a position to summarise these key questions that have come in so far?
Yeah, sure. Okay, one of the questions that has come in is, can you use a residential property as security for a commercial property? The plan is to purchase a 1/3 share of a family property using our principal place of residence, which has 70% equity, which is off farm, looking for a 90% loan to value ratio. Is this commonly accepted?
Vern, I think I'd probably have to ask your thoughts on that one.
Thanks, Gordon. Yeah, overall, in principle, it is possible to use a residential property to purchase the share in the rural property that you're looking at. However, a 90% lend against that residential property may not be possible. And look, the lend to valuation ratio is only one part of the scenario. As we talked about before, then it comes down to cash flow availability and the ability to repay that loan. It also may depend a bit on what that share of the rural property looks like that you're buying, what sort of rural property is, what's the industry. There are a lot of variables, but short story is yes, it may be used. As to the loan to value ratio, that depends on a number of other things.
So, Vern, if I could make another observation, I'm imagining in the first 2 webinars we talked about a potential borrower putting together a well-reasoned case so that a lender could look at it in its entirety with all of the elements of the deal, so to speak, articulated, clear, and risk scenarios developed along with the financials. Is that what you're suggesting there, that that kind of story and validation is necessary?
Yeah, absolutely, Gordon. You need to look at the whole scenario with the supporting documentation that we've talked about over the last 3 webinars, so that the lender's got a full understanding of the whole picture, and can make their assessment from there.
Okay, thanks, Vern. So, Greg, back to you. How are we going with questions?
Okay, another quick question that has come in, Gordon, is and it's probably more orientated to Vern, what criteria does Qrider apply to considering whether to lend to a particular applicant?
So, Vern, over to you.
I think there is, yeah, that's probably, we haven't got enough time left to cover the whole thing. Look, you need to be a resident of Queensland. You need to be a primary producer or show us how you're going to become a full-time primary producer, with which there's a definition test there. The guidelines are available the full guidelines are available on the Qrider website. Then it comes down to a number of other things. So it is quite a lengthy conversation. The best place to start is Qrider have 11 regional account managers spread around Queensland. Their details can be obtained from the Qrider website, and they're out in the field in the regions as their title suggests, and it'd be good to sit down with one of those, make contact with one of those regional account managers and sit down with them and run your particular story past them, or have a look at in preparation for that, have a look at the guidelines on the website. Okay,
thanks, Vern. So in other words, personal contact with Qrider, whether it's you or someone else, would be good. So Greg, thanks, Vern. Greg, anything else that we need to cover off?
Yes, there's a couple more questions that have come in. So to the question number 4, Gordon, where it says, what else haven't we covered?
Yes.
It came in, a suggestion came in, can you improve the understanding between equity and security?
That would be covered in the Leander Ready program at a high level, because that will form the basis of the paperwork that we're covering to help people actually work through putting together their application.
Okay.
It's a bit like Vern and Damian have both discussed. The devil will be in the detail, but conceptually, not a problem.
Yep. Okay, another quick question has come in. How common is it that the cattle prices used in the budgets the banks uses are higher than the prices the producer uses? The bank was using recommending and making decisions on higher spot prices and not the 5-year average. Have you got any comments about that?
I might make one quick comment and then hand over to Vern. The experience that I've had and what I've noted is that there's not necessarily any hard and fast rule between lenders on a number of those points. And it comes back to, I think, what we commented about earlier, which is us as borrowers putting forward the proposition about why it is that we're using those values. In my experience, lenders will come back to us and have a conversation with us about the validity in their view. And that might be a different conversation if you're speaking with 3 different lenders. But Vern, you're a lender. I should really get your specific take.
It would be, unless the numbers presented were exceptionally conservative, it would be very unusual for the lender to adopt a higher price than what the applicant put forward. if that were the case, yes, I find it unusual. It would probably depend on what the applicant, how they justified those prices as well, and what their reasoning was that why they put those prices forward.
We have two final questions that there is. First question is there an opportunity for financial institutions to prepare Leander Ready templates and forward them to clients before the interviews?
I've noticed some variation between some of the templates that are used, and I do know internally there are yet other templates that are actually used for decision-making purposes. So our intent with this Leander Ready program is to create templates of best fit that would require minor adjustment. It's also possible, if you look far and wide, that you will actually find, and Qrider is quite transparent about their templates, which Vern can speak about. Often it's possible to get the templates. Sometimes it's a little more complex. But Vern, your thoughts?
Yes, look, Qrider has a range of templates, application templates on our website, from the application form through to the business plan, which we require to show how the business is going. And typically we are dealing with either first entrance into agribusiness, primary production, or a sustainability type person, where enterprise, where they want to build the enterprise up to become more viable, or become viable, sorry. So that's where the business plan comes in, and it's fairly self-explanatory. Then we have a range of production schedules around cropping, different livestock, sheep, cattle, goats, that type of thing. And then those production schedules feed into an overall cash flow template. So yes, templates are all available on the Qrider website. And I believe most agribusiness commercial lenders have similar sorts of resources available on their online platforms.
Yeah, thanks, Vern. And I guess my final comment too is, if we can make it easy for people to even make some adjustments to templates, that's part of our objective, so that they can be personalised to the particular lender requirements.
Okay, our final question, Gordon, for today is, does having off-farm income assist in reducing the deposit security required by the bank?
I think I'll pass that one to you, Vern, if you don't mind.
Let's talk about the commercial perspective. Yes, it can. As I think what I alluded to in the first webinar we did, with a commercial lender, there is the opportunity to negotiate the terms and conditions. Therefore, the lending value ratio they're prepared to extend, etc. The interest rate margins and different loan covenants. With Qrider, we are bound by the government regulation and the scheme guidelines. Yes, off-farm income in certain circumstances can be taken into account, particularly where you're a first entrant into primary production, and you need that off-farm income to sustain and develop your primary production business. On our sustainability guidelines, probably not as much primary off-farm income would be considered, because you need to be looking at being a sustainable, viable primary production business where that is the majority of your income.
So I alluded to the Leander Ready program because part of what we're doing with the webinar series is providing information about lender readiness. But this program itself has been developed specifically to provide materials to help people do what they need to do, which is every week, over 12 weeks, we provide some information. Every month, and could be more often, group online sessions where we discuss progress, and then monthly special topic webinars, and then there's a member portal where there's actually a resource library. Question is, why are we doing all of this? By now, an administratively very competent person can certainly spend the time and effort to create lender ready materials. For a lot of business owners whose skill is in the technical areas of their business, there's generally regarded as being more complex than one might think, generally takes longer than one might think. And our approach is really to make it as simple and easy as possible so there's less stress on the business owners, because we know, I mean, being a business owner myself, and Kym can probably comment on this in a minute, we've kind of got our core business that we need to keep rocking and rolling. So when we get diverted off, we start to get fairly stressed because there's all this stuff going on. And so part of what we're doing in this process too is acting as a sounding board to help people actually figure out what they need to do, how they need to do it, how the templates could be used, and so on. And you'll notice that I've talked about the idea of it taking from, say, 1 hour a week as a minimum over the 12-week period. At the same time, though, there are people who've been in our programs or are in our programs who go, I'm really going to give this my best shot. And I've seen husbands and wives, business partners spend 3 or 4 hours a week, or maybe like an hour a day, just working through the worksheets that are provided to get themselves well advanced. So I'm just making people aware that this first online program that's starting next Monday, we've capped the number of participants to 16 businesses. And that's because the value is in the online group sessions and the special topic webinars. And we want to give people the opportunity to have their say, to ask their questions, because getting the material is one thing, filling out the worksheets is another thing, but clarifying and getting feedback, just as a lot as we've done in this session, is really quite critical. So what we proposed to the early bird people who booked in was that we would add just a personalised one-on-one session, which might go for, say, an hour or 2 hours even, where people can work through their own points. They might want to talk about their financials and not be so comfortable talking about that in a group setting. So what I proposed here is that if people do want to book into next Monday's commencement of the online program, we'll actually add, give this to the early bird registrants as well, a second one-on-one session, because I know from past experience that makes such a difference to people's lives, to be able to go, I get the opportunity to talk this stuff through with someone at a personal level. So Greg, I just wanted to put that on the table so that people could think about this program starting next Monday. If they'd like to book in, there'll be some details come up in a minute about how this program is going to work. Kym, before I move on to closing things off, I just want to see, because these are the take-home messages from your webinar a week or so ago, is there anything else that you think needs to be added in as kind of like a final comment from you about your experience and how program like this could help people?
I think when you're flat out on the ground trying to make things work on the ground, your time is valuable there, and you need to keep that going. And if you haven't got someone that's got your back, or someone that's keeping everything in the focus, it's pretty hard. And if you have an ability to have like a lender ready situation where you have you're halfway there, you've got more information and you can be more confident in what you're doing. Therefore, there's no sacrifice to the business while you're trying to do a lender ready an application, and and you can do the best by the application, because you really do have to put a lot into that application. You feel like you're there's a lot of personal stuff that you feel like you're putting out there, but understandably the bank needs to know your position to take you on. So yeah, I found it extremely really good, well worth it. The time I would have spent otherwise, and I was able to go out and do something else, was well worth it. Yeah, particularly where it's, you know, I can do financials, but when you start talking different languages to what I'm used to, it's a bit difficult. So it's good. Yeah, that's about it.
Thanks, Kym. I know people have contacted Kym, and she's been fairly flat strapped because they wanted to get some insights from her. You'll notice my phone number, Vern's phone number and email address, Kym's details and Damian's details as well. You'll notice on the right-hand side that the Leander Ready program, you can simply go and look at our website and find a link to click onto that. Equally, I know people are more than happy just to pick up the phone and have a chat to me or someone else. So, Greg, the way I think we might leave it is if anyone wants further information, just give us a call.